What's going on, guys? Welcome back to another video. In this video, we're going to be talking about everybody's favorite stock to YOLO weeklies on, and that's going to be Tesla, and how they beat the analyst expectations for delivery numbers in Q4 and in all of 2020. But they did not exceed Elon Musk's pretty high expectations for the delivery numbers. Now, before we get into all of that information, if you enjoyed this video, please go down and hit that like button and consider hitting the subscribe button so you're never late on any one of these videos and you can stay up to date on all of your favorite stocks and maybe even learn about a couple of new ones. Now, if we go over and take a look at the chart of Tesla, it's up about a little bit over 700% on the year. Tesla's been ripping over the past 5 years, and anybody who has bought Tesla basically within the past year or 5 years has been making boatloads of cash. Now, Tesla had a lot of interesting events this year. They had their stock split that they announced on earnings, which sent the share price way higher, and they also got included in the S&P, which we saw with this massive run-up. Now, that's very good news for Tesla, since there was a lot of rumors about that happening, but nothing was really confirmed. A lot of people thought that Tesla might be too volatile to be in the S&P 500, but with a stock split, which kind of creates more shares in the market, it kind of acts as a dampener on how much the price can fluctuate in a given day. Now, it hasn't really worked. As you can see, Tesla basically almost doubled after this split, but overall, that's what it's supposed to do, and that's why they were able to get S&P inclusion. Now let's go over and take a look at these actual delivery numbers. So Tesla 2020 deliveries beat estimates, but fall just short of Musk's target. So now if we look at the exact numbers, the company delivered 499,550 vehicles during 2020, and that was above Wall Street estimates of 481,261 vehicles, according to the Refinitiv data, but 450 units shy of Elon Musk's target of 500,000 units. Now, that's a very lofty milestone, or a lofty goal, especially with this year when auto companies really took a big hit, mainly because people didn't have as much cash or free funds and discretionary income in order to buy things like cars, but Tesla around the world has been doing amazing. Now, Elon kind of had a couple remarks on Twitter. He said, "At the start of Tesla, I thought we had optimistically a 10% chance of surviving at all." But that just kind of goes to show you what kind of person Elon Musk is. He really believed in this company and thought it could be something big one day, even though he didn't think it actually had a feasible chance of being successful in terms of like its business model, but he kept pushing and made the company work. Now, if we scroll down a little bit further, we can see that Tesla's delivery push has been supported by its new Shanghai factory, the only plant currently producing vehicles outside of California. Tesla is trying to really get into this Chinese market, and they have said that 47% of all of their vehicle sales will be coming from China in 2021 and beyond. Now, some major analysts are very bullish on Tesla. We can see over here that Tesla could deliver 1 million vehicles in 2022 on eye-popping demand from China, as it sees pent-up demand for electric vehicles across all price points. We've seen this with the electric vehicle companies that are actually based in China, like NIO, XPeng, and LI, and they're getting a lot of government funding, and the government is really supporting these companies. Now, the U.S. could also experience an acceleration in the adoption of electric vehicles in 2021 and beyond if the incoming Biden administration increases electric vehicle credits. Now, according to Ives, who sees Tesla hitting 500,000 delivery target this year. So this article came out a couple weeks ago, but I think it's very safe to assume that the Biden administration is going to have a heavy emphasis on more environmentally friendly practices, and that's going to include electric vehicles so we can decrease some of our emissions. Now, Ives also reiterated Tesla's neutral rating with a price target of $715, which we can see is $10 above what the share price is trading at currently, and a bull case price target of 1,000, representing a potential upside of 7% and 50% from Wednesday's close. Tesla is also looking to make a debut in India. As we can see here, they're trying to make an India debut early next year, and they're going to begin operating in India in early 2020, a top Indian minister said on Monday. Now, the Tesla operation will begin with sales, and then they are going to consider looking at assembling and manufacturing vehicles in the country. Now, as of right now, like I said before, the only place that Tesla vehicles are manufactured are the Shanghai factory and in California. So if they can spread into India, they will have greater access to the market over there. Now, if the demand is high enough for electric vehicles in India, which it might be, we could see a massive valuation increase in Tesla in the coming years. And Tesla has for years expressed interest in expanding to India, but in 2018, Musk shared that some government regulations in India had emerged as a roadblock. So it's looking like they have been able to overcome these issues and are looking to actually start selling vehicles in India starting in 2021. We can also see that there are some large institutions that have very large stakes in Tesla. If we go over here, we can track the buying behavior of ARK in Tesla. So we can see back in August, ARK had about 2.5 million shares of Tesla at a price of $4.10 and kept increasing and maybe slightly decreasing, but overall it's been on a steady trend up throughout the end of the year. Tesla has been steadily increasing in price as well, but as we can see here, it really started to rip up towards the end of the year when the S&P inclusion happened, and ARK had kind of topped out their volume of shares at about 4 million, but currently they have 3.7 million shares, which accounts for 2.6 billion. Now, Tesla is held in multiple ARK ETFs, which is a very good sign. If an actively traded and as successful investment firm like ARK is putting 2.6 billion of their dollars in one company, it's safe to say that everyday retail investors should have confidence in this company as well. Now, since Tesla really ran up this year, we can see a slight decrease in their share volume, and that's mainly probably the result of some rebalancing tactics in order to go into 2021 with a more balanced portfolio. Now, since Tesla really wants to get into this Chinese market, they're going to have a lot of competition. Now, it's possible that they get pushed out of China due to the Chinese government wanting their own homegrown electric vehicle companies to be in the top spot. But it's also possible that Tesla can overcome this. It's basically, they've overcome every obstacle that they've had so far. It costs so much money to start up a new car company, and especially an electric vehicle company, and Tesla was able to do this in a pretty short amount of time, and they've been wildly successful at it. They're going to have a little bit of some roadblocks, maybe trying to get into the Chinese market and extend their vehicle sales in China, but I think that Tesla has a very good chance of overcoming NIO, XPeng, and Li just because of the brand name Tesla, and it's kind of a bedrock and a very solid name in the electric vehicle space. They have amazing vehicles, they have great technology, and they're always coming out with new upgrades and cars. So that's going to be it for this video. If you guys enjoyed what I had for you today, please go down and hit the like button and hit the subscribe button, and consider commenting down below your thoughts on what the price target of Tesla is going to be at the end of 2021. Hope you guys have a great night.